Are you looking to invest like the professionals without the buyer's agent price tag? DIBA helps you save time and money by filtering out 99% of markets within Australia to give you the top 1% of Australia's suburbs set for strong returns. The Do-It-Yourself Buyers Agency save you thousands on buyer's agent fees and months on courses. Instead, for a fraction of the price, you can search the highest performing markets, target the right property for your investment goals, and be guided through the purchase process. DIBA, the ultimate tool for the everyday investor. Sign up at www.diba.com.au to put the power back in your hands. That's www.diyba.com.au.
This is a Momentum Media production.
Welcome to the Smart Property Investment Show, the podcast by investors for investors.
Hi, good everyone. How you going? Phil Tarrant, host of the Smart Property Investment Show. I hope you're well. We're here to chat through what we do a couple of times every month around finance. Finance being the engine for all property investors. Some say property investment is a game of finance, and those people that can do the finance the best typically are positioned to best capitalise on investment opportunities when they arise. You see, and that's a lot of the headlines at the moment is around serviceability issues for a lot of people. This notion of mortgage prison, and that is where people, they can afford to pay the mortgage they currently have with a certain bank. However, they would like to pursue or consider other options, but they don't meet the serviceability requirements for that same bank and or other banks. So they sort of get stuck. Thankfully, a lot of the lenders now are looking at the buffer rates around serviceability a little bit differently for people who are refinancing. And banks want to keep business, to be fair. They don't want you going somewhere else. So there is still room for negotiation. But a lot of the narrative recently has mainly been around this notion of mortgage prison, whether or not you can get a cheaper loan, how you can best position your cash position to buttress rising interest rates. And that's been the big theme since mortgage interest rates started going up. And the rude shock for a lot of Australians, owner-occupied or investors, around 1-point-something% interest rates aren't normal interest rates. We're actually what is a pretty typical market cycle right now. Whether or not interest rates will stay where they are right now, whether they'll go up again, some people are still calling potentially for a more rate rise in the calendar year. But a lot of the economic forecasters, and you're seeing it already in fixed rates, are predicting potential reductions to interest rates towards the back end of 2024. So I don't know how it's all going to land, but what you can do is be proactive around your mortgages, making sure that the interest rates, the products, the lenders that you have today are best servicing you, but also having a view towards tomorrow. And this is the big way to look at property at the moment. And a lot of the conversations I've been having on the Smart Property Investment Show, this podcast is around where those opportunities are in the market. And for people who do have serviceability and are able to increase their debt position and have the capital for new purchases, there is potentially a lot of opportunities in this market moving forward into the market of the future. When you think of all the challenges facing it right now with building and construction approvals, migration, property as an asset class, if you listen to a lot of commentators, should be a strong investable asset into the future. It's something I'm certainly considering. I'm always looking at what next. You would have heard on this show, the Smart Property Investment Show, shuffling decks on the smart property portfolio, realising some equity release and some cash through sale. What am I going to do with that money? Who knows? But what I am doing is getting ready to be making investment decisions into the future. And by that, it's about having confidence and being comfortable with my financial position and my ability to increase my debt levels potentially, and then start looking for opportunities and assets. And to do that and do that effectively, you want to be armed with a pre-approval. Pre-approvals are pretty important. It's sort of essentially an indication from the bank saying, yes, we've done an assessment on you, and on all those assessments, yes, we'd be happy to lend you a certain amount more money, which means that you can go into any negotiations with a lot more confidence. So I really want to have a chat about that today. I've invited Rebecca Carlson. She's a broker at Finny Mortgages, finny.com.au, to come and have a chat with me, because I know it's just not people trying to refinance their mortgages. There are people who are out there looking for opportunities. Rebecca, pre-approvals are important. How are you going? You well?
Yeah, well, thank you. So yes, you're right. Pre-approvals are important, and we are seeing more buyers come out into the market. So there is a bit of importance on that. I see a lot of people that are coming to me firstly asking for borrowing capacities, but yeah, definitely looking to get into the market again.
Pre-approval is not far after. So once people are sort of I guess the sequence is, well, what's going on with interest rates? Can I afford to hold my properties? Then people go, yes, I can. Okay, how do I increase the cash position? Maybe do some refinancing, maybe release some equity on the way through, because if you've had a property in Australia, particularly the capital cities over the last sort of 2 to 3 years, you've probably had pretty good equity uplift. So people are thinking about buying again. Is a lot of equity washing around? Are people sort of releasing equity at the moment, Rebecca?
Yeah. Look, there's definitely a lot of equity. I'm finding a lot of people are finding equity in the PPOR to buy multiple purchases. So they are also looking at their existing portfolio and drawing what they can on existing investments. But yeah, depending on when they're bought, there might not be just enough for the next purchase. But yeah, I'm seeing a lot of equity being released for the next ones.
Well, you have the pain and also the privilege to do my mortgages. So, and I've spoken about this. The team over at Finney are doing a refinance of our portfolio. We've sold some properties recently, and I spoke about that in the podcast recently. But what remains, we're sort of resetting to a interest only, 5-year interest only. So removing the principal repayments from those mortgages, which we've been paying for some of them for between sort of probably up to 3 or 4 years. So that's just to really recalibrate the cash position so that we're not burning as much at a negative cash flow point of view, which is good, and I'm happy with that spot. And hopefully we'll sit around, we're refinancing in interest-only mortgages on the basis that they'll go down in time, let's hope. But I've asked for you to do a pre-approval for myself, like other investors thinking about where the future opportunities are. What's the sort of big advantage with the pre-approval, Rebecca?
Yeah, so look, I'm having a lot of conversations with people about borrowing capacity and pre-approval. So borrowing capacities, we're really just doing high-level figures. Benefits of having a pre-approval. So we've got a concrete budget for the purchase. It also holds a lot of weight with buyers agents, real estate agents, anyone you're dealing with for this next purchase. Faster approvals for once you've located a property. So pre-approvals, we're doing all the hard work up front, the assessing all your capabilities, the checking through your credit file. We're identifying any issues, raising any questions at that time, getting them resolved, absolutely ready to go for the next purchase when the right property that you're after comes up.
So real estate agents like it a little bit more if you do have a pre-approval.
Yeah, look, I do get that feedback. So I do have clients that want a written approval so they can talk to the real estate agents. They accompany it with their offer. So the sellers of the property are more inclined to say, well, this person does have their finance ready to go and considers their offer more favourably.
Yeah, I found that over the years. If a real estate agent has someone with a pre-approval or not a pre-approval, they're going to take the person with a pre-approval a lot more seriously because they'll know that they'll negotiate with an eye towards they can actually complete the purchase. And I know buyer's agents, if you're using a buyer's agent, will say, go and get a pre-approval before we do anything. You know, they're not going to enter in negotiations if it's going to be conditional to whether or not you can get finance. So it's smoother, it's more streamlined, there's less stress. With a pre-approval, it means you can move with confidence. It's going to give you a price point. And just because you get a pre-approval at X doesn't mean you need to spend that amount of money. You see a lot of people in this market may have got a pre-approval or a budget when interest rates were 1.something%. They decided that, well, if that's what they're willing to give me, I'll take the maximum amount. Now, that's okay at that point in time. But when interest rates go up to 4.1% at the official cash rate, so you're paying sort of 6+% on your own mortgage rather than 1.something, if you capped out on that, maybe you might be feeling a bit of pain at the moment. But a pre-approval is good in many, many ways. How long's a pre-approval last for, Rebecca?
Yeah, so different lenders have different criteria, but majority last around 90 days. However, in saying that, I have clients every now and again, they don't quite find the right property within 90 days. It's not a strenuous exercise to extend a pre-approval than it is to do the initial pre-approval. So, yeah, the limitations on the time, don't be too concerned if you just go in close to that 90 days or over.
And it makes the actual process easy when you do identify someone. We'll just go to a quick break, everyone. I want to chat about that, but we'll be back in a moment.
Crush the burden of rising mortgage repayments. We understand that managing your finances can be overwhelming, especially as interest rates continue to rise. With access to 70+ lenders, our team of specialised brokers will find the best rates for your specific needs. Count on us to secure a lower rate swiftly, giving you the confidence you deserve. Book an appointment with one of our experts today to protect your financial well-being and secure your future. Call us now at 02 8866 2444 or visit our website at finney.com.au.
Welcome back, Phil Tarrant from Smart Property Investment, chatting with Rebecca Carlson. Now, you said that you sort of, depending on the lender, you might have 3 months of pre-approval, easy to extend it if that be the case in time. I guess that may be more challenging if some of the rules or where the banks start asking for next year's financials and all that sort of stuff. But how much more work is there once you have a pre-approval and you exchange on a property to actually get unconditional from that? Is it just really ticking a box, or they go into a lot more details?
Yeah, so I'll just go with sort of the average, but if you're within the 90 days on a pre-approval, you locate a suitable property, the next steps would be providing the bank the contract to sale, may or may not need evaluation depending on LVRs and location. We should have identified anything else that's needed for the final approval and tidied that up beforehand. So really, they should be the last things that are required for the unconditional approval.
So you've got to do the hard work anyway, so you may as well do it before you exchange on a contract rather than after, because I know a lot of people have gone, oh, I'll probably be okay with the financing, so I'll exchange on a contract. Then they've got 40 odd days to try and work it out. It becomes very, very stressful. You must get a lot of those phone calls, people saying, quick, I need finance, so I can't complete.
A few more than I'd like.
Yeah, it's probably it's unnecessary stress, right? Because you've got to do the work anyway. You may as well do it in the front end, is my view. And having that confidence, going into a contract without certainty around debt, your ability to get debt can be, very stressful for a lot of people. Most people get a pre-approval these days before they buy, though, don't they, Rebecca?
Yeah, look, I do think probably 80% of people do, but there are sort of 20% of people that go, oh, but I checked out my borrowing capacity. And it's like, well, that's really a guide. Doesn't mean you're going to suit with every lender. No one's looked at your credit file. Yeah.
And does it annoy mortgage brokers having to do pre-approvals that never eventuate into a home loan? It means you've got to do all that work, but there's no home loan there. Does that happen very often, or is it just part of the course?
Yeah, so I'm probably reasonably lucky. So I don't have that many pre-approvals that don't eventuate. So there are the odd ones that don't, but realistically, I think the work to put into those, opposed to the stress of not having them, if those clients find something, outweighs it.
And that's because a lot of your clients are sort of quite, I'd like to think, savvy investors, right, who know where they're going, and this is finance being a tool. They've got a pre-approval and they get approved for that finance. Typically, they'll pull the trigger on it, right? Or they've come through a buyer's agent and they're ready to go.
Yes, that's exactly the situation.
That's cool. Sounds really, really simple, getting a pre-approval, but it's still one of the bedrocks of really smart investing. Like, you want to de-risk the process as much as possible, and having certainty around what you have to spend and banks' appetite to give you debt makes a lot of sense for me. If people want a pre-approval from Finny, how do they start that process, Rebecca? I'm first. Put them behind me in the queue.
Yeah. So look, they just reach out, get in touch with us, get booked in with one of the broker team. We'd have initial discussions, collect information, verify, provide options for lenders. If you're happy to move ahead, we can just send you through the additional things to get the ball rolling.
And can they sort of get in touch with your team? Was it finny.com.au is the right place?
Yep. Or they can email us on info@finny.com.au.
How do you spell Finny?
FINNI.
.com.au. Well, thanks, Rebecca. It may sound simple, as I said, but if you think about investing in property, do it with the pre-approval. It's going to arm you not only with a budget and some level of confidence around the bank's appetite to lend. On the other side of it, it's going to give you a lot more leverage when you're negotiating with real estate agents or giving confidence to your buyer's agents to do that on your behalf. So it's a huge tool. You've got to do the hard work anyway, so do it at the front end. You're not going to get finance from a bank without having to provide all the paperwork that you need to. So do it at the front end rather than the back end. Rebecca Carlson, mortgage broker at Finny, thanks for your time today. Really appreciate it.
No, thanks for having me, Phil.
Nice one. We'll keep talking about finance. Some people might be going, yeah, Phil, that's really easy. It's pretty simple. I already know all this sort of stuff. It's good to get back to basics. And we have a lot of people tuning into this who are quite new to property investing. I would say if you're going to be buying property, get a pre-approval. It's pretty simple. Go and speak to the team over at Finny. mortgagesfinny.com.au. Thanks for tuning in, everyone. We'll see you again next time. Until then, bye-bye.
The information featured in this podcast is general in nature and does not take into consideration your financial situation or individual needs and should not be relied upon. Before making any investment, insurance, tax, property, or financial planning decision, you should consult a licensed professional who can advise whether your decision is appropriate for you. Guests appearing on this podcast may have a commercial relationship with the companies mentioned.